Well, a new U.S.-focused jobs report found that through May, U.S. employers announced nearly 700,000 job cuts in the first 5 months of 2025. That was an increase of 80% from the first 5 months of 2024. Let's talk about it more with Andy Challenger. He's Senior Vice President of Challenger Gray & Christmas. It is a U.S.-based employment and coaching company. Andy Challenger, thank you very much for joining us. What has driven this huge increase in layoffs in the United States?
Yeah, well, we've seen the job cut announcements coming from a wide spectrum of sectors. It's not concentrated in one area. Of course, the government cuts that came out of the DOGE initiative really spiked the number overall this year. But even without the government job cuts, we're still on a pace that's much higher just from the private sector than the last 3 years in a really significant way. It's coming from retail, technology, services companies, and warehousing too.
Andy, I was quite intrigued at the number of job declines in the technology sector. You know, these were the jobs that everybody was going to get rich off of going in road ahead. A lot of high-paying jobs are in that sector. Compared to, I mean, you mentioned losses in the service sector and whatnot. What is that telling you? You know, is that a cause for real concern in terms of income levels and income generation in the U.S.?
I think it is a cause for real concern. Technology actually has been the area where we've seen the most job cuts announcements over the last 3 years. Part of that was a big right sizing of tech companies that overhired in 21 and 22. There was a hiring bonanza in the technology sector during a great labor shortage. A lot of those companies have come back down to earth, gotten the right number of employees. So that is not the main driver today for tech cuts. When we're talking to tech organizations today, it is more about serious economic concerns. It is about their outlooks over the next 3 years. So these are deeper cuts than that story of getting back to pre-COVID levels actually explains.
The layoffs in the retail sector absolutely exploded. We told viewers that on an all-in basis, layoffs are up 80% in the first 5 months of 2025 versus the same period in 2024. In the retail sector, the increase is nearly 275%. What is that telling us about consumer confidence in the United States and the perception of retail employers of consumer confidence?
Yeah, it's clear that they are reducing their overall costs to be more protected during a period of potentially decreased consumer confidence, as well as just some real uncertainty and volatility. I will say that when we look at the retail sector, these aren't necessarily line level positions. These are a lot of corporate, well-paying jobs. We are seeing overall that the white-collar segment of the labor force has been particularly affected by these announced job cuts over the last year.
Andy, as you do your surveying, what's your sense of what inning we are in the game? All this uncertainty seems to be compounded. We're not getting any clarity with respect to deficit reduction, et cetera. Are we still early in the game from a sense of companies trying to right-size or resize or do what it takes to survive in this kind of uncertain world that we are in now?
Yeah, so when we look at the larger kind of post-COVID period, companies hired up like crazy. They've been slowly cooling as the labor market and economy have cooled with rising interest rates. Felt like we were coming to this nice soft landing, both in the overall economy and in the labor market, where things had cooled down, but not tipped into a recession or, companies laying off more people than they're hiring. this period of uncertainty is now just starting to really hit the labor market. It's always a little bit of a lagging indicator. Clearly, we know that companies are trying to get right and cut costs before a period of potential downturn. So I think we're just, when we talk about that period, the post, getting to a real place of certainty in the labor market with all this additional change. I think we're still in the beginning periods of that. I'm talking to lots of companies right now that are anticipating layoffs throughout the year.
And curious, what was your biggest surprise this month?
I think the fact that we saw retail spike so significantly. It hadn't been the main driver of job cuts throughout the year. That lets me know that it's not just the white collar jobs that we were talking about. It's expanding into other segments of the economy and other segments of the labor market.
Tomorrow, we will get the latest non-farm payrolls numbers from Washington, though that, of course, is a measure of job creation, not layoffs, but job creation. Is there a read-through here from very elevated levels of layoffs in the first portion of the year to trends in job creation for the remainder of the year?
Yeah, of course, it's connected. We're talking to so many organizations. We work with companies that are going through layoffs, and there's lots of them that are still hiring in certain parts of their company, but overall are being really cautious about headcount in this environment. We do track job creation announcements that have been publicly made, and those are also at historic lows right now. So just a real sense of caution around adding anybody to the workforce at this point in time.
Andy, thank you very much for this insight. That's Andy Challenger, Senior Vice President at Challenger Gray and Christmas. It has released its most recent job cuts report just this morning, minutes ago.